The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. My pleasure to be here Monday through Friday, market days. Of course, Friday not going to be a market day. So I want to thank John and Larry and Tom. 3 great hours. Let's see if we can have another one right now. We've got programming right through the day. I want to go straight to the market. There's a technique that I use, and it has to do with similarities, how candlesticks fall, and what do they do at certain points in the Chapman wave methodology. So for my subscribers to my opening call, where we are almost totally short in positions, I did look at 2 long positions this morning, but I thought I didn't want to take a chance and get into them on the long side with new positions where they are so close to all-time highs. I would just step back and wait and see what happens by the end of the day. Let me show you what I was looking at. You're looking at a Dow chart, a daily chart that I show my subscribers every day using the Chapman wave methodology. What's beautiful about this, it uses at some point over a period of 2 to 3 weeks, it's used dozens of the different techniques that I've developed over the years. So what you've got is the low from the 2nd of February at 17,034, and the market skyrockets to a leg E. Remember the Chapman wave, you look for the lowest, most obvious low bar, merely count each successively higher peaks. When you get to D, other things can happen. It could recycle to a brand new buy signal to buy mode, where it gets parallel wave counts and goes to something like a G/C, and it still goes to a D. D is what you expect. That's the crux of the Chapman wave methodology, is to assess what you're doing at a trough or a peak D. Okay? Simple. So it goes to a D at 18,244, pulls back for 2 days, then pop, goes to 18,288, an all-time high on the 2nd of March. And then what does it do? It starts this is the first time it's had a trading range like this. And what is the trading range? The trading range becomes 18,100s to the 17,000 high 500s, 17,579. And within that range, you just keep going up and down like a yo-yo, like a tunnel that's going sideways, and you just keep popping up like a ping pong ball, up and down, not breaking to the bottom, not breaking to the top. Eventually what it does, it goes to a leg F, and then a peak F at 18,351.36, followed the next day, that's the 19th of May, the next day at 18,350.13 for a Chapman wave 2-bar reversal. Soon after that, we go short, start going short a couple of times. And what happens is you get a Chapman wave inside wedge. That's the pink line, that dashed line there that becomes a support level. I'd also drawn in a slightly rising up channel. I don't need to have it there anymore because other things have taken the importance of that up channel and turned it into a redundancy because we've already moved on. And what we're doing is we're recycling between cup formations and arch formations. But wait a minute. We had a very sharp slide on Monday, Tuesday, Wednesday, on Monday. And then there was a little candle, fairly small candle yesterday, where the rally were early on fizzled very quickly, just like we're seeing a rally fizzle today. And then I said, no, wait a minute. I discussed this many times with subscribers. The pattern of the very strong down candles, these big black candles right here, followed by the strong white candle. And I usually like to have it red and black, red and green. Sorry, red and green. Red being on the way down, and green being on the way up. But this was just a little easier to see. No, I didn't want too many colors here because I wanted to be able to use trend lines, the 9-period moving average at the maroon line, a whole bunch of things. So this is just easier to see. And then what happens, I recalled that the very sharp pullback on March the 10th was followed by a little doji candle with a slightly lower low on the 11th of March. And the very next day, even though there was a test of the low, it was a huge move to the upside. And then move to the upside went for 1, 2, 3, 4, 5, 6, 7, 8 bars. Didn't break to a new height, went to 18,205 from the 17,820 level, I believe it was. And then it came down again, made a lower low. But wait a minute, it had the same candle, look, very big, strong black candle, a doji candle, followed by, actually was an inside bar, and then whoops, to the upside at 18,008, and then it turned down again. Retest, successful retest, and then it goes on to an A, B, C, a D at 18,175, alternate wave count, that's what we're talking about at D, and then it goes to peak E/A, and then an F with a doji top, and there you get, just like you got at 8,288, you had a 2-bar reversal, because the very next day you went to 18,281.95, 1 point lower high. So you got a 2-bar reversal here on the 19th at a peak F, alternate count peak F. And then you're starting your way down. And then all of a sudden, you're about to sneeze. Don't sneeze, don't sneeze. All of a sudden, what do we see? We see that there's another strong black candle right there, not as strong as the others, down candle on the 8th of June. Make a little doji with a slightly lower low to 17,714 on the June the 9th. And you pop to the upside, 2 big bars to the upside, and at 18,109, you come back down, you make a lower low. So I said, hey, we've got to expect that there could be a rally today. So I didn't change any of our short positions. We did get stopped out of one short position. This was 200% long, a particular index. We took some profit there. We'll probably go right back in again because we are short the root, the actual index itself from quite a bit higher up, and that's still holding very nicely. So it's pulled back. So this is what I was expecting, and I expected that 17,826, the 9-period exponential moving average, would be strong resistance. We haven't got there. We went to 17,801. The day's young. We are vulnerable now to upside, downside. Anything can happen. Greek news. Now, let's just put the Greek news in perspective and say the Greek news is important in that it is just a trigger point, but the trend has already been established to the downside in the Dow, sell signal to sell mode, and the weekly chart is in a down move, but it hasn't yet. I want the weekly chart to see what happens tomorrow at 4 o'clock, but we'll see. I'll talk about that in a moment. I just want to run the numbers. The Dow's up 117 at 17,737. The S&P is up 13 at 2,076. The comp index is up 33 at 50.20. Gold is down to 11.69. Silver's up 2 cents at 15.60. Platinum's up 9 at 10,008. High-grade copper's at 2.64, just kind of stuck there. Crude oil is down 1.5 at 57.91. And bonds are down over 1.5 points at 149.08. And the dollar had a really nice move. It's trying to make a leg D. It's at 96.19. And I will talk about it a little later on. Right now, I do want to go to our first caller. We've got John in Washington, D.C. John, how are you?
I'm fine, Basil. How about you?
Thank you.
I'm very well, thank you. And I was just thinking, I was in Washington, D.C. just a couple of weekends ago. I was actually in Silver Spring. Is it Silver Spring or Silver Springs? Anyway, Silver Springs. And pretty area, I must say. I'd forgotten. It's a long time since I drove around the area, but those hills and valleys, really very pretty. So you'd like to look at?
2 stocks, RIG, RIG, and SLV, silver.
Okay, so we're back to those. So now what I said before was I didn't think that silver as a long was something that I was interested in at that particular time. It was last week. And what you've seen is it's gone to a lower low. Yesterday, it went to 14.80. The SLV is the iShare Silver Trust. Let me move the 120 chart away. And what I said is my eye says, both technically and just on the configuration, is that the lowercase h that goes to an M pattern in the silver weekly chart says that 1460s area is going to be really important. And as we get there, we will try to make some kind of a decision whether or not it's time to nibble, because a move down is either going to break down completely, or this is going to be yet another time. Let me just see what it is in terms of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. So you've got really 2 weeks to go to make a left side, right side arch formation test. So we are really close. The MACD is just turned down, but the week's not finished. We've still got tomorrow to go. And the stochastic's way down at 22%. It's in an area, let me just check the 120-minute chart. Yeah, it's in an area where this is where you could expect that there could be a bounce. So now let me just ask again, just to refresh my memory, do you have a position or are you waiting for a position?
I have a position underwater right now.
Okay, I remember. Now it's all coming back to me. Okay.
It's a long-term.
But I bought it for long term. I don't know if it should be.
So now, okay, so now this is what I want you to discuss. If you are wanting just a general question as to what I'm looking at in the silver contract, what I'm looking at is the monthly is still very bearish. The weekly is going to get this big test coming up in the next week or so of that 1460s area. The daily is saying we're right at a point where you could get a bit of a bounce. So I wanted to just quickly look at the dollar, because the way I'd said to subscribers this morning, the dollar action suggests that it wants to go to a leg D, which is just above 96.37. So at 96.38, it gets to D. And at that point, we might see whether or not it's going to pull back, because the technicals are okay. They're not great. The weekly technicals have also pulled back and are at a point where if the dollar goes to 97, then I've got to consider that the test of the high of 97.78 is possible. And if it starts to fail and the dollar, say, makes the D, and then all of a sudden by Tuesday or Wednesday of next week, the dollar is down under 95, that's where you will see gold have its first real opportunity to have at least a decent bounce to make another one of those arch formations. So now, let me put it this way. If you are a holder and it's a long-term position, then I don't think that you should be doing anything right now when you're within, on the SLV contract, within, let's call it 40 to 50 cents of testing the 1460s, very important support. So let me give me a second here. And there's something else I want you to look at. So I don't really want to change your position if you're a long-term holder, but I do want to give you what my target would be on the downside if it goes lower than the 14s. So I'll be right back. We'll be back with John and Rick straight after this break. Dow's up 123. Basil Chapman, Tiger Tick.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back, and the Dow's now up 129. Good move, and the S&P's up 14. I want to go back to John in Washington. We're looking at SLV. So this is what I want you to say. Now, if your outlook in the long term is to buy and hold, I want you to also appreciate that there is a chance, based on my work, and nothing's foolproof, that the 1437 low of February of 2010 in the SLV is going to be really important, because if it takes that out, the next trough is down at the 1227 level. But the way I'm looking at the chart is that in the monthly chart, the MACD rallied, but not only didn't the SLV rally, it couldn't even get above and hold above the 9-period moving average. So there's going to have to be something that goes on. You know, it might even turn out in a few weeks' time or a month or so to be the Greece situation that all of a sudden the gold comes alive and it'll drag silver up as well, because it becomes a currency of fear. But as I see it right now, I see it stuck in the trading range. If it can hold at 1460s or not even get there, but in the next couple of days, if the SLV can break above 1540, which shouldn't normally be a big deal, but this point it really is, it's at 1496, then I'd say, hey, it just stays in this range and it just keeps consolidating with slightly lower lows, slightly slightly lower highs and slightly lower lows. That's the way I'm seeing it right now. But if you are holding it for a long-term position and you have a different thinking that you're using it basically as something for safety, I prefer to be actually in gold rather than silver, but they kind of will go together-ish. I'm just going to say to you, John, if SLV on a weekly basis closes underneath $14 and I'd say 50, but I'm going to give it a room, $14.30, it has 1 week to get right back into the 14.70, 15 area, because if it doesn't do that, it's going to go even lower. That would be my only warning to you, that I'd just be careful. And I'd actually say, take a little bit off if it closes underneath 14.50 in the next 2 weeks, just to protect yourself. You can always put it back again, but I don't want you to be holding a position that my eye at this particular point says it's so critical that it rallies in the next 2 weeks without breaking that key support that it's made twice over a period of a year. So that's my recommendation. Now, I'm just going to do RIG real quickly because we've got people waiting. So RIG, I don't like it yet at all. I'm saying RIG, I think it's going to retest, at least if it doesn't test the 1328 low of the week of the 20th of March, then it's going to stop at about 15. Is it 1553 RIG? I think 1520 to 1490 has to hold. If it doesn't hold there, it's going to retest the left side low bar and it'll test the 13s. So in the next few days, it's really, I don't think it's going to hold. I just don't think it's a good looking chart. It's got that pattern I call the Eiffel Tower, straight up and straight down. Oh, I had an email sent to me with some pictures just to this morning, and had the Eiffel Tower being built in the 1885 period, and the Statue of Liberty was being assembled in 1884. So now, how did I get that? Oh, Eiffel Tower. That's the Eiffel Tower pattern in the daily. So just be real careful. You don't want to be holding stuff that just keeps hurting, and then you don't even want to look at it. You can always. You've been in the market a long time. I'm sure you do pretty well when you hit it right. So don't let this sit there just kind of waving its hand at you saying, oh, I'm going down. Try to control the stock a little bit. So that means take something off if it starts to break some support. You can always put that back again, and you can always make up money. It might take a little while, but I don't want to see you get trapped in this. So be careful with SLV and RIG. Those are very critical supports coming up. Hope that helps you, John.
Okay, thank you, Basil.
Thank you very much for calling. I appreciate it. Call me next week and see what's happening again. Rick in Orlando. Rick, how are you?
I'm doing well, Basil. How about yourself?
I'm well, thank you.
Great. It's pretty warm here in Orlando, Florida. I'll tell you that.
Oh, it is. Yeah, no, we've been very mild. In fact, it's a rainy day today. I hope it gets real sunny in the next hour or two because I'm supposed to play tennis this afternoon. We'll see what happens. So you wanted to look at the United States natural gas fund.
Right. Basically, I'm playing the natural gas up and down between the DGAZ and the UGAZ.
Okay.
Currently, I'm in the DGAZ. My real problem is this stuff is like it's all kind of just close and setting there. And I kind of use your 13.9 exponential average thing.
Right.
And they're both setting right there. And it's like, my gut feeling is that this, this is out of the break up, even though obviously my position is I expected maybe to come down to test, under two, on the lower end.
Okay, so how about this? We've got a break coming up. I've got it right here. We're going to look at the UNG as soon as we get back. I've drawn in the M pattern, the lowercase m. Let's see what happens. It's in a narrow range. We'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back, and we're on with Rick in Orlando. We're looking at UNG. I'm using that as the root. I should probably use natural gas and stuff, but this is pretty good. This is the United States Natural Gas Fund. So, Rick, what I wanted to do is just grab the top of this 120-minute chart, peak G, and I wanted to show what one trend line can do, the information that you can get just by joining in a certain point. Now, if I put the trend line right there, that would be good because I'm going to the outer limits of the bar itself. But in fact, because the body of this peak F that was made on the 17th after the low bar on the at 11:30 on the 4th of June, I think it would be appropriate to bring it down to the top, the body of the candle, because why? Because all of a sudden it's starting to hit other levels, and that makes it much easier. So that's the one. But wait a minute, I've got a symmetric triangle moving up here. In other words, the down angle is pretty much the same as the up angle, and you're getting to the apex. Now, if you know anything about Bollinger Bands, you know that Bollinger Bands, when they start to narrow, you look at it and at a certain point you say, hey, that narrow band is going to break one of the ways, and very sharply, you're never sure quite which way, until it actually pierces the Bollinger Band on the upside or the downside, and then it tends to accelerate even further. There's a similarity and a difference between a symmetric triangle in the sense that in my work, it actually tells you that the upside because of the way that the apex is forming and the duration that you've used in trying to, as it's narrowing, the range is narrowing, it tells you that you can look at some information. It might be a candle, it might be a gap. In this case, it's the 200 period moving average, which is at 1358, and the price right now is at 1345. And you can see, based on the pattern that I'm looking at, that there's a really big sine wave that was being formed based on that 200 period moving average, this coral colored thick moving average line right there. And then it starts to narrow and narrow, but it's still got the same accent, which is that it wants to go below, make a cup, and then wants to go above and make either a V-shape, inverted V, or an arch, and then come back down. But it's becoming harder and harder, more difficult to get above the 1358 level. So the way I'm looking at it now, the stochastic's not all that good. The MACD is flat, not bad, but it is flat, not giving us any information. And it says that there's a good chance that if UNG actually breaks to the upside, the 1374-ish area, or the high that was made at 1377 back on the 25th, could in fact become resistance, and you could come right back again towards the 200 period moving average. But on the downside, if it takes out the low of 1322, you've got 1313 as the next level of support, but the MACD and stochastic will actually turn quite negative. So my bias right now is to say that unless there's some news that just suddenly happens to trigger a decent rally in natural gas, I think it's kind of stuck in a range. But if it was to slide below 1313, my thinking here is that it would immediately make that arch formation that I've drawn in the daily, which kind of stopped there, but that arch formation would trigger the gap between, that's the low, 1289 and the high that was made on the 5th of 1252. So those are the parameters. So it says to me that when a price gets stuck, very often it gets stuck a lot longer than your patience. But if you do your homework, you will see that the technicals in the daily are saying it has to really quickly, by tomorrow afternoon, Monday at the latest, it really has to be pushing into the 1370s or even higher than that to say, hey, I'm going to try for the upside, even though there's resistance there. But more than likely, it's just kind of stuck here. And if it does take out the low of 1322, 1313 will be the next level of support. Takes that out, and you've got an arch formation that says we're alternating between cup and arch. We're back to the arch, and I'm going to be going a little bit lower. So my bias right now is to say, although it looks neutral, the weight of evidence is just slightly more negative than positive, but you will get the trigger points if the levels that I just discussed are hit.
All right. Well, I'll keep an eye on it, and we'll see what happens. Yeah, that was my problem, is that it's sitting betwixt and between, and it's like, which way does the break favor?
You know, I learned a long time.
I get impatient. That's my problem. It's
well, I was just going to talk to that issue. I remember I don't do it anywhere close to as much, even when I'm trading the futures, anything like that. But I used to be impatient and say, it could move up. Oh, but wait, it could move down. And then I try to make a decision. But that's silly, because if you aren't going to go long unless something happens, and you aren't going to go short unless something happens,
you're kicking yourself.
just take it off your radar for the moment. Wait for a trend. At this point, it is trendless, and that can be very frustrating. Remember, my theory about the rectangle formation is it can last a lot longer than your patience, especially if, like me, you're impatient.
I understand. Listen, thank you so very much, and have a nice 4th of July.
And you too. And yeah, we're all looking forward to that. So, folks, let's do a couple of things here. I had a couple of questions. I'm going to try to get to the questions. A very nice, Eddie sent me a really nice bunch of charts and stuff that has to do with the Greek situation. I'll try to read a little later. But most importantly, the Greek situation is really just a trigger. Because as far as I'm concerned, let me do what I want you to do just a moment ago. Let me just show you a couple of things. I'm going to run these very quickly. The Dow, the monthly chart we waited for the month, and the month had a lower high bar, and that's G/C. At any point, that 17,500s in the Dow, to me, is absolutely imperative to watch. Why? Because if you're watching a cushion of support, let me just go back to this chart. Remember I was talking about this pattern with just trading in a trading range, and then I was about to go on, and I said, no, I want to take my first caller. Let me go on here. You see what's happening? There's actually a very large arch formation that's formed in the Dow daily chart. We did an exact, to the day, left side, right side price time match based on the candle that I chose for it. And that came to the day, and that went exactly to the point. It went 17,579. The low of 26th of March was my target price in this particular pattern, and it had to come in on the 30th of June. Yesterday was the 30th of June, and the low was 17,000 yesterday, 17,576. It took it out by 3 points. Does that matter? No. That's what it had to do, and that's what it did. So no, it doesn't matter that it went under it by 3 points. It's really important that it closed above it, because the bar that takes out the left side low has one bar, maximum of two, to get back above that left side low bar. Well, it closed yesterday above 17,579. Today, after the patterns that I spoke about, strong down candle, doji-ish type candle the next day, strong move up that we saw back in March to 10, 11, 12. That's exactly what we were seeing here today. The difference is that we've started to make lower lows and lower highs. That's number one. Number two is that the MACD and stochastic are still very weak. Number three is that the 9-period moving average of 17,824 has to be pierced in the next couple of days, and then you've got to treat it as support to be able to make another cup formation. I'm not sure that's going to happen this time. And I want you to go back to the Dow. So the parameters to watch are 17,890s must be taken out by Tuesday or Wednesday of next week. And then I'll say, oh, okay, now we're going to get another test of the last high, which was 18,188. Let's see if it fails or if it breaks down. But are we going to continue making lower lows or lower highs? Or are we going to make higher highs and higher lows over the next 2 weeks? My thinking, based on this inside wedge pattern with the target area right there, round about the 13th of July, is for a test of the 17,520 to 17,490 area. Big test. Okay, so let's get out of this now. Let's move back, and I want to do the questions that I had. Would I look at the IWM? Yes, the IWM. Lousy pattern. I drew it in for my, I didn't show it to subscribers this morning, but if I had, I wanted to show that it made an arc, it was making a potential bounce for an arc formation. I'm calling this G/C in the weekly chart. It's much clearer, and a doji candle for June, and that makes the high and the low of 129.10 really important for the month of July, and it makes the low of 121.50, a break under the 9-period moving average, really important for July. Those are the parameters to watch. The IWC had an alternate wave count. It's gone to a G/C in the monthly chart. Monthly still looks fabulous, not the technicals. Technicals don't look so great. But I'm pretty sure, I say pretty sure, I'm not 100% sure, but I'm pretty sure that by tomorrow I'm going to put this, and I'm going to put a question mark over it to say that I believe it's not an alternate wave count, that this is probably a peak F that's being formed in the weekly chart of the iShares Microcap ETF, the IWC, and it's trading at 81.69, only up 16 cents. 9-period exponential moving average at 82.29. What was the high today? 82.24. And the MACD and stochastic are very poor. I think that this is making a top of consequence, a peak D top, and it's just testing. Look, folks, think about adding to your techniques the 200-period exponential moving average. I can assure you that you will find it informative, but if you use it for trading purposes, you will develop a technique that says, I don't care about that moving average because it's a longer-term moving average. Longer-term, even if it's the 120-minute chart, doesn't matter. It's still the longer term of the 120-minute chart. And it is so informative that I find that I just use it constantly. I ignore it, but as soon as it comes close, it becomes absolutely a catalyst for many things. The QQQ, oops, I didn't mean to type there. The QQQ series, I've got to get used to that. Okay, QQQ right there, QQQ. That is the PowerShares QQQ Trust Series. Had a peak G top, another arch formation, plunges down to a lower low, went to the 106.60, what was it, 64 level. It's gone to a leg A, B, C. I think it's also going to make an arch formation and then turn down. Greece is just the catalyst for the trigger to pull back. It's not the end all be all for us. But it's smaller than Rhode Island. Come on. I mean, what is it? It's the emotional response. And they're not going to change the ways. I always think of, you have kids or you have animals or whatever it is. And whatever it is, there's the one little fella just doesn't listen. Everybody's listening, and the one little fella just say, come inside. No, the one has to go its own way. The character never changes. That's not a good thing or a bad thing. It's just the character, and you have to deal with it. And that's Greece. Greece has got this character that says, hey, we're used to our pension plans. We're used to this. We're used to that. We're used to being saved. We were once a great country. We're now a good country, but we have different ways. And we're trying to stick to those ways, and they're not really working, and we're not really wanting to recognize it. It's just as simple as that. Make it more complicated, forget it. I mean, it's not complicated, okay? And nothing's going to change. And you can give them as much brutal as you want within 2 years. I read to you that I haven't got it in front of me. From 2000, we went through the same thing in the year March of 2000. Okay, so nothing really changes. Now let's see, and it's just a beautiful place from the pictures. I've only flown in and flown out, but I've never actually been there. I know my brother's been a number of times and he loves it. So yeah, beautiful place, but economically problems. That's the way it is. Okay, QQQ series. If it breaks under 106. In the next 2 weeks, the QQQ series is in real trouble. And I think from the chart pattern I'm looking at, this is a very critical period because the technicals are failing. So it's going to take something absolutely fantastic to get the QQs back to 110.30. They're at 107.84 right now, to 110.30-ish, which says, hey, now I can retest the old high and make that. Oh, I made the leg D. Oh, yeah, I put it in. You can't see it. Did I? No, I didn't. That was a D. Right there, peak D. Let me just double check. I don't want to do something that's not right. 116, 111.16, 111.13. Oops, no, it didn't. It's a peak C1, C2. That's why I didn't put it in. Okay, so we're going to be watching the QQQ series. The New York Stock Exchange, Larry always looks at it because being of the old school like I am, it's always been a very important indicator, but it didn't really work it couldn't rally very strongly to go to a big move above 11,108. It should have been 11,230s or something with the move that some of the other indices had. Couldn't do it. So I've got it in a peak D in the weekly chart. I should be putting in a down candle. I'm going to put it in right now because it's closed a number of times below the 9-period moving average. The MACD's been very negative. Stochastic's way down at 50. So it's in a sell signal to sell mode already in the weekly chart. So now I want to do this. So you've got the IYT. Okay, got a break coming up. IYT is broken key support in the weekly chart. Peak F, this is a hat-trick top I'm looking at in the monthly chart. This is not good news for the IYT, the transports. All right, I'll be back and we'll talk about bonds and we'll talk about some other things. Basil Chapman, Dow's up 124, S&P's up 13. Be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi, folks. So we're back. So a bunch of things that I want to look at in just the remaining few minutes. And then, of course, we go to General Martin. We go to today's Wednesday. Oh, great. General Martin, you've got Steve Rhodes. You got Dave White. You got Tom O'Brien. Just a wonderful lineup. Let me just do this quickly. Remember I spoke about the VIX index and made a big deal of it last week? Well, what I'm looking at here in the VIX index trading at 16.78, down $1.45. In the 120-minute chart, what I had said to subscribers on my opening call is that we had gotten to an E. Therefore, you could expect some kind of a pullback. But we are actually long, and so far it's held. I had a huge, like 30% profit the other day. Didn't take it because this is one of the few times I really do think that there's life in the VIX index. I think it's going higher based on the chart formation. But you never know. These things move so quickly. So here's the 120-minute chart, and it says that at peak E, it's gone quite sharply low. It was 19. Can you believe it? 1980. And now it's at 1676, down 3 points. That's a huge decline in percentage terms, but that's the way it works. Now, look at this. You've got the daily with that big spike. Is that a new leg A or is that a continuation E? So I have to be very careful. I have to say, hey, if you're using the Chapman Wave methodology, be conservative at first. Call it E/A. Why? Because that pullback from peak D didn't go below 1182. This could be a continuation of that pattern. But the stochastic's holding at 76%. That's a change from all the other moves. And the MACD is still very strong. It says there's life in this thing. So unless if the market goes up another 80 points, you will see this VIX index drop really sharply into the 14s. But in the meantime, it's at 16.73. So I'm looking at it, I'm saying, just a day to go. And then that weekly chart kicks in. And look what happened. For the first time in since the week of the 27th of March, you are above the 9-period moving, the 200-period exponential moving average, way above the 9-period moving average. 1429 is the 9, and 200 is 16.73. But the week hasn't closed. You've got to wait for a candle to complete its week, and that'll be tomorrow. Even though it's one day less, it doesn't matter. It doesn't know. The chart doesn't know it's a week. This is a week. It'll be starting a new candle the following week. So this is going to be very important. Does it close above 1640 tomorrow? And if it does, if it closes anywhere in the 1760s or higher area tomorrow, it's going to suggest quite strongly that fund managers have started to say, you know what, this is an active ETN. I want to play it. I want to use it. I want to get some protection. And I'm buying. That's what it's going to be saying. Now, all of a sudden, you've got a monthly chart that kicked in, and that monthly chart closed above the 9-period moving average right on the last day of the month. It's amazing how that works. I remember another June a few years back when I was down in Newport, Rhode Island on vacation. I went down, I couldn't get internet properly unless I was in the lobby. And I went down to the lobby and I'm sitting there and I'm looking, and all of a sudden the market broke out. And I had to send an email quickly to subscribers to say, okay, watch out, we're getting a reversal. These things happen very quickly sometimes in June, down and up. So what happened was, that June candle was very strong for the VIX. That's the market pulling back. Now what we're looking at, we've got the start of July, and it stopped at 200-period exponential moving average, didn't break above it, and that's at 1995. So this is going to be a very important close on Thursday, but it's not important it's only important chart-wise. The Greek thing will go on, right? There's still the vote on Sunday, which I think they're still going to have. A lot of things are going on. Let me make it real easy. As far as I'm concerned, if you look at my weekly charts, the weekly charts tomorrow are going to give a lot of information. So I wouldn't be surprised if it's a kind of a cautious session, more to the downside than the upside, just kind of a holding pattern. And let me tell you what I'm looking at. I'll give you the numbers right now. In the Dow, we're about to go to the diagnostic trading hour. So in the Dow, a close above 18,030 tomorrow would really say, hey, your weekly chart is still holding pretty darn well. And a close below 17,620 would say, hey.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.